Good morning. Today is Thursday, September the 28th. The time right now in Singapore is 11:21 in the morning. And overnight, we continue to see sell-off in equity markets. We can see that the Dow Jones Cash Index has reached a level of 33,300, a level we have not seen for quite some time. So we can see that this market is definitely currently under a lot of pressure. There are a couple of reasons why this is the case. And of course, one is the ongoing strike at the UAW, which is the United Auto Workers, demanding higher wages and a shorter work week. And currently there seems to be no resolution in place, and this is likely to spread over to the weekend. And of course, this weekend we have the possibility of a US government shutdown because they couldn't get, or rather Congress, the two chamber of Congress couldn't come around to approve 12 appropriation bill, which is needed to keep the government going. By the way, for those who are not aware, the fiscal financial year ends for the United States government at midnight on Sunday at 12 noon our time, which is September 30th, and the new fiscal year for 2024 will start on October the 1st. So they need to get these appropriation bills passed before they can reopen the government, and this is acting like a wet blanket over the economy. And of course, we have the Fed chairman telling us last week after the FOMC meeting that interest rates are unlikely to come down significantly into 2024. In fact, there is a possibility of one more rate hike towards the end of the year. In my opinion, that is likely to be 10 days before Christmas. What a Christmas present. So we can see that these are all hanging over the markets. It will result in equity markets coming off. Of course, the big story is, of course, the yield is climbing rapidly. Today, 28th of September, the US Treasury is going to issue a new series of Treasury bills, and this will be put on auction. And this is basically taking liquidity away from equity markets as well as bank deposits, because most people are parking the money in money market instruments, which are yielding fantastic rates above 5%. So we can see that this is all acting as a perfect storm as far as equity is concerned. Now, in S&P 500, we are seeing the same structure. We have an equality move now from 4,607 to the overnight low of 4,238, and this is within the allowable area within 4,205 to 4,269.5, which is an equality move to the downside. If this market do not collapse going forward, there is a possibility it may rebound. However, we will have to see what goes forward, because if extended shutdown in US government, anything in the range of 30 odd days is going to be very damaging. Now, the last time they had a shutdown was during the Trump administration towards the end of 2018, at the beginning of 2019, and that lasted for 35 days. And the damage caused is going to be uncalculable. Okay, so basically what we're going to see here is that these are all sentiments we have to be aware of. In the Nasdaq 100, we are also seeing a pullback. Although the pullback is not as steep, we don't have equality move yet. From a high of 15,932, the equality is at 14,244, and so far overnight low we have 14,432.6. So we have a little bit more towards the equality range of 14,244. So anyway, we are watching this market as it goes into the weekend, because this weekend is going to be crucial. Okay, and over in Hong Kong, prices are still coming off in a big way. As we can see in this chart here, the Hong Kong futures market is likely to take out the week's low at 17,384, and if this continues, it's likely to go and gun for 16,900 to as low as 16,750 levels. So we can see that there is still some more room to move on the downside. The same thing is seeing in the Nikkei. The Nikkei have a big move down this morning and is already targeting 31,700. As we are speaking right now, the price is at 31,700. Nearby support is likely to be somewhere between 31,540 to this current level where the market is at 31,700. The next level, which I think is slightly more durable, will be 31,180 to 31,440. So between these two levels, I think the market should be able to find a temporary bottom. And of course, nobody is able to tell whether it is able to hold. Okay, and over in the dollar is currently on steroid because of the high yield offered by US Treasuries, and this is keeping the dollar very much in demand, because this is sucking in a lot of global capital into the US Treasury market. And of course, in order to participate in US Treasury, you have to own dollars, and that is causing the dollar to actually ratchet higher. We can see that technically, we are likely to come into an area of resistance very, very soon. The area is 106.70 to 107.10 or 15 levels. And we can see currently the high traded overnight is 106.54. So we are not that far away. We are likely to see some kind of resistance going forward, and perhaps even a profit taking that may take place. Okay. And over in the euro dollar is still coming off in a big way. We can see overnight the euro dollar is still trading lower below 105 to as low as 104.88, and this is just a whisker away from the nearby support of 104.44 to 104.75 area. Sterling is still being offered. It has yet to hit the bottom. Bottom is still a little bit away at 120 right now. The market is trading just above the 120 and 110 levels, and there is every possibility it may dip into the 120, even below that at 119.70 levels. So do watch out for further losses in the sterling. Aussie dollars has probably hit a bottom. We have seen the market hit 63 cents, to be exact 63.30 cents, and right now we see a little bit of a rebound, but I think the rebound is going to be quite limited, somewhere around, I think in my opinion, somewhere at 0.6435 to as high as 0.6465 is going to be where I think the market can basically do if you ever want to rebound. Now, the strength in the dollar is spilling over into dollar yen as well. So traders are throwing caution to the wind because the dollar right now is very well bid. But in the dollar yen scenario, we have to be extremely careful because we are getting very close to intervention zone defined as 150 to 152 levels, because last November, this is exactly the level the Bank of Japan together with the Ministry of Finance came in to intervene. Now, there's every scope that the Bank of Japan or Japanese officials are coordinating their move with the US Treasury. So there is every possibility of a coordinated intervention in the yen. And if this is the case, then dollar yen is likely to be at risk of massive profit taking to the downside. So do watch out. A move, anything like a 600-point move is not unusual in a intervention exercise. Okay, so be very, very aware. Then in the dollar Canadian, we are beginning to see a little bit of rebound in the Canadian dollars despite the strength in the crude oil. So we can see a crude oil prices should actually cease the dollar Canadian trading below 133, in my opinion, because Canadian is the Canadian dollar is actually very highly correlated to crude oil prices, and if crude oil prices are staying above the $90 per barrel, there's a very good chance it will gun for $100 per barrel before the year end, and that should actually be positive for the Canadian dollars. In turn, this should see the dollar Canadian actually trading to the downside. I have hope that the market will come back to 131 levels. I think that will be a more sensible level to buy the dollar versus the Canadian dollars, okay, in my opinion. Then, of course, we can see that the crude oil that we just mentioned is currently trading not only above $90, it's trading at $95. This is a 7-month high. So we can see that the market is again edging towards this immediate barrel of resistance, likely to be around $96.10 to $98.45 level. So we are getting very, very close to possible area of supply. So do watch out for profit taking to emerge around this area. Okay. In precious metal, we're seeing basically a virtual sell-off in gold market. The gold market has actually previously held very well at 1900. This time, this is the $1900 level, and market actually punched through last night. And we have seen the gold prices has already fallen more than $52.70 per ounce this week itself. So this is rather massive. And currently, last night's low is at $1,872, and it is at this current level that I think maybe we can get some kind of technical support somewhere between $1,862 to $1,873.50. But topside is going to be kept below 1900 for all I know, and likely to see further losses going forward. And the next level will be somewhere around an 1800 levels to as high as 18,200. So I said $18,020. Okay. $18,820. So we can see that this trajectory suggests that we can see likely to see further losses in the gold market. Now this is spilling over into the silver market. Silver was on the way up until this recent move, and the market right now is trading just above the most recent low here at $22.20. You can see the last low here is $22.30. So if this market continue to dip lower within this bracket of $22.11 to $22.40, we could see some kind of a triple bottom, and that should technically be conducive for a bounce. But we will have to see what happens in the gold market. If the gold does not bounce and go straight for $1,820, this scenario may not happen. Okay, in Bitcoin, market is basically not doing very much, although there was a rally attempt back to $26,840, but it was immediately reversed in the following 4 hours. We can see prices now is back to the lower end of 26,000. Okay, so we can see that prices are not really doing very much because in terms of the treasuries competing for capital, the money is definitely not flowing into digital assets. It is all going into US treasuries, and that is, like I said, acting like a giant vacuum cleaner, sucking up all capital to the detriment of equity markets, to the detriment of all risky assets, including digital assets. So this is all I have for you for today. In the meantime, you take care, and I'll come back to you tomorrow with another update. Bye-bye.